Welcome to Manage Your Damn Money with Ben and Malcolm, where we trade in personal finance advice for entertaining conversations about money, and would like to ask Trevor Noah from The Daily Show if we can borrow one of his writers. We're kind of running out of jokes for this intro. Welcome world to yet another episode of our favorite show about money, Manage Your Damn Money with Ben and Malcolm, where we trade in personal finance advice for entertaining conversations about money and millennials. Malcolm, what's going on in your world, sir?
Man, I'm tired. Rehabbing a whole house over the weekend.
Okay.
To get it ready for sale. I'm exhausted, man.
So you were down in North Carolina.
Right.
People who don't know.
To drive 5 hours back to
you drove
like
down
3 o'clock in the morning. So yeah, I'm definitely like spent.
When'd you get back?
Monday morning at like 3.
Wow.
Yeah.
Were you doing any of the work yourself?
All of the work. Yeah. Well, one of my boys lives down that way.
Okay.
He came and helped me out for a few hours too, but for the most part, yeah, it was.
That's so nice.
Yeah. Yeah,
that's nice of your friend, because most people at this age are like,
how many of us have them?
Yeah. Well, speaking of homes, I and my wife moved into ours this weekend.
Congrats.
And I am exhausted.
Okay.
Like moving stuff. We had movers, but still there's like that extra stuff you have to do.
You have to do the hard work of telling them where to put everything.
You know what's also funny about like being a new homeowner though? Like when we were doing the walkthrough of where things were, like the valves and stuff like that, the guy was like, the builder was like, yeah, and this is the valve to the such and such, and you want to shut that off when there's a freezer warning because you don't want your pipes to freeze. And I was like, that's real adult manhood stuff when you got to remember to turn the pipes off so they don't freeze. Like, now I'm a man.
Which has actually happened to me before, so I'm glad he gave you that advice.
I
didn't turn it off. They froze.
Okay.
I went outside to try and wash my car, and the pipe burst inside the house and cost like $800 worth of damage.
That's exactly what
Ironically, stuff we'll get into later in the show. But those are the things that go along with... So at the same time, I'm trying to get rid of a house. You're finally moving into the house. So
yeah, indeed.
Ironic how that comes full circle.
I don't know who's right and wrong in this situation, but it is a great allusion to the fact that this episode of Manage Your Damn Money, we're covering the unfamiliar and unknown cost of buying and owning a home. We actually have a guest for this episode. His name is Adam Holmwood, Esquire. He's a lawyer of Village Settlements, Inc. Here in Maryland, and we're going to talk to Adam about a couple different things, but all of it having to do with home buying. But as we always do on every show, it is now time for headlines. A horrifically bad idea. Smartphone voting is coming just in time for the midterms, Malcolm. This was an August 2018 piece on VanityFair.com by Maya Kosoff. It reads, almost a year ago, the Department of Homeland Security alerted roughly half of all U.S. states that their election system had been targets of hackers linked to Russia. Experts have warned that Russia's attempt at meddling did not end in 2016. A quote said, they're still very active in making preparations, at least to influence public opinion. And this was a researcher from a security researcher at Trend Micro, and quoted for the Associated Press in January. Enter a company called, I think you say it, Voatas, all right, so I'm doing it again. Voats.
That very clearly says votes. VOATZ.
Oh, it's just not spelled like vote. So it's
Yep.
VOATZ. All right, so I'm just trying to
put on your millennial lens for a second and speak in social media.
Right, I'm trying to put on my Spanish lens with that one. Votes is a mobile election voting software startup that wants to let you vote from your phone in the upcoming midterm elections. And actually, it's apparently being put into practice. West Virginians serving overseas, so I imagine in the military, will be the first in the U.S. to be able to vote via a smartphone app using the Votes technology, and this was reported by CNN at the time. The Boston-based company raised $2.2 million earlier this year, helped along by buzzwords such as biometrics and quote-unquote blockchain, which it claims to allow it to secure the voting process. Its app reportedly requires voters to take and upload a picture of their government ID along with a selfie-style video of their face, which facial recognition technology then uses to ensure the person pictured in the ID and the person entering the vote are the same. The The ballots are anonymized and recorded on the blockchain. Security experts, to put it mildly, are not impressed. On Monday, or that Monday that this piece was published, security architect Kevin Beaumont tweeted a thread deftly critiquing the app for its flaws, including an out-of-date data encryption and authentication service. This is going to backfire, he warned. Nor does the company's use of quote-unquote blockchain technology mean its database is foolproof. In fact, Bitcoin skeptic David Gerard, you could substitute your name in there, Malcolm, told me the term barely applies to votes at all. The word blockchain these days literally means whatever I'm trying to sell you on, he said.
Amen.
To let the church say. West Virginia isn't opening up mobile voting to all voters, at least for now. Votes will only be able to be available to military members serving abroad, as I mentioned earlier. But it's testing the product in a live election, which is interesting. Should those votes be compromised or should the app glitch, it would have a non-zero impact on overseas voters. Furthermore, other similar companies are testing their own versions of blockchain-backed mobile voting, including a company I guess called Votum and London-based Smartmatic. So this is an interesting story, Malcolm, of the supposed application of blockchain in a different capacity.
Yeah.
Blockchain we're familiar with in terms of cryptocurrencies and being ways to transfer a certain kind of currency, encrypted,
right,
in a certain kind of way. And this is now saying it's going to encrypt votes, and then you'll be able to cast your vote through an app.
So I will say, first and foremost, this is probably a better use of Bitcoin's technology than Bitcoin is itself. So at least they have my voats in that regard. But separately from that, like, I can just see data collection hackers working overtime to penetrate this system.
Right.
Like, I mean, not to slight anybody, right? But I'm pretty confident West Virginia doesn't even have Wi-Fi everywhere yet. So we're talking about taking something as important as our election system and moving it digitally and trying it out in a place that's like the third or fourth to last state to fully digitize. Like, how does that make any sense to anybody? Like, why wouldn't we try this out in like California where like I can use 5G technology basically at this point where most people don't even have it. So that, I mean, first and foremost, that's a flaw, right? Just foundationally. Second of all, how do I know that the ID I'm showing to this system hasn't been compromised and I didn't just take it and download it from somewhere online in the dark web or whatever?
Well, it's supposed to match the ID to the video that you take, which sounds
stupid. You can say it. It sounds stupid. I'm going to take a selfie. I'm going to take an Instagram story to my voting booth, basically, and match it up to my ID. And they're going to have a picture of me in the system that somehow matches all these three things across the table. Where are they going to get the picture of me to start with? How are they going to know that I haven't? What if I have plastic surgery since the last time I took that picture? And that, I mean, like all these things that just don't make any sense. But separately from that, the reason I'm 100% confident that this will never happen, at least not in modern history.
It's supposed to happen.
Could you imagine Chuck Schumer and Nancy Pelosi trying to explain this to somebody? The same people who, when they were supposed to be grilling Mark Zuckerberg, didn't even really know what follows and mentions meant. So how in the heck are these same people who are responsible for making the laws supposed to then be able to have a meaningful conversation with anybody when it hits the fan and somebody taps into this system? So, absolutely.
That's a huge threat. It's interesting, though, on the voting side, because there are some people who say we should make it easier to vote. Voting,
I agree with that.
Voting affects our society. But is blockchain digital voting as accessible and easy as that could be? Do the threats outweigh the value for making it, easier to vote?
Yes. I think because I mean, we have proven that we can't even get archaic analog paper ballot voting right. Like if there's questions around the 2016 election, how are we then trying to take it a step further and add new points of entry to the equation before we've secured the ones that were jacked up in the first place? So I think honestly it makes a lot more sense to fully secure the voting system, have people no longer be making paper ballots that they've got to punch into systems and that kind of stuff first. Also, we could probably stand to make voting happen on a day off.
Right.
So instead of it happening on
your work day,
Tuesday when everybody's got to be at work, maybe we do it over the weekend, like Saturday and Sunday, and then
too many people would vote then, Malcolm.
Well, right. I'm just in a perfect world where voter suppression doesn't exist, and gerrymandering isn't a concern.
Right.
These are the things that I think we should be talking about implementing first, before we try and add in another layer of vulnerability to an already vulnerable system.
Absolutely. Last question about this. We've been talking about it in the context of votes. Votes obviously impact our society and, in some ways our economic worlds that we live in. How does this digital voting, conversation affect the things that are happening on the financial side? Like a lot of different financial institutions are looking at, blockchain technology as a means by which to move and change how money changes hands. How does that impact a thing like votes, impact the conversations that we're having about, digitizing money?
Well, so that's actually a good case for why I don't think digital voting will happen as soon as you might think, because the folks who stand to benefit the most, in my opinion, the major banks in our country, have basically taken a wait and see approach to digital currencies and also blockchain technology underpinning transactions. So if those people who stand to make the most money from figuring it out are still saying, we'll tiptoe around it, we'll play around with it a little bit, we'll hire a few of you hackers out of California to come, try some things and see what happens. But we're really not there yet. And everything I'm reading is saying like we're at least 10 years out from it having a meaningful impact on the way we bank right now. So if that's the case, then I can only be even more assured that the U.S. government isn't going to jump first and say, oh, okay, well, the banking system doesn't trust it, but we do. Like that just doesn't seem right. So, again, I'm pretty confident that this is, a fantasy conversation. In today's terms. Maybe we get there eventually, but I just don't see it anytime soon.
Interesting. Well, we want to remind people you're listening and watching Manage Your Damn Money with Ben and Malcolm. I want to quickly remind you can always past episodes of the show on Apple Podcasts, SoundCloud, Stitcher, Google Play, and Spotify. Of course, leave us a review there. That helps us go up in the ratings and helps more people catch our show. And of course, if you have a question for Malcolm you want him to cover for his Malcolm's Money Minute, send it to us, info@manageyourdamnmoney.com. And also, you can follow us on social media. My Instagram handle is @MYDM1. Malcolm, what's yours?
@MalcolmOnMoney.
And it's the same for Twitter, and you can catch us on Facebook, facebook.com/manageyourdamnmoney. This is MYDM with Ben and Malcolm. We will be right back. Welcome back to Manage Your Damn Money with Ben and Malcolm, where on this episode, the conversation at hand is the unfamiliar and unknown cost of buying and owning a home. A lot of things inspire the topics we cover here on our show. Our team here at Montgomery Community Media, Gaynell, Maddie, our listeners, and our own sense of what needs to be discussed at a particular moment in time. But there are also times when our very own lives inform the discussion. This is one of those shows. Malcolm, as I discussed at the top of the show, my wife and I just moved into a house of our own, and with my pockets much lighter than they were a few weeks ago, and my adult levels of anxiety raised another 2 full notches for having attached myself to yet another large bucket of debt, I thought we could at least do an episode to shed some light on things I and many others probably didn't know about the cost of buying a home beyond just the monthly mortgage, Malcolm.
You gotta look at the positives, man.
I think I unfortunately have that pessimism gene where I'm like, oh, doom and gloom is just around the corner. You just wait.
I hear it.
You can hear it?
I can hear it.
Yeah.
Like, I need you to say at least one positive thing as you pull up to this house today about how
it's nice. I've never lived in a house that had automatic ice dispenser.
Like, that's your thing?
That's the thing. Like, I've been doing tray ice since
this
I was
house
a child.
is brand spanking new.
Yes.
And your thing to be excited about is the fact that you can walk up, push a button, and ice comes out.
Never had it before.
Oh my god.
Amazing. I know. I'm 31 years old. This is the first time I've ever lived
My
in a house like
grandparents had an automatic ice dispenser on the front of there.
That's
Let's
good.
move on. Let's move on.
But anyway, there's some positive things for sure. I'm certainly proud. But there are 20 hidden costs of home ownership, and this was a story that I had to go way back for. This was a December 2010 article on CNBC.com by Cindy Pearman. One of the interesting things that you can spend extra money on, not knowingly, as she lists in this piece, your heart. And what does she mean by that? She says you may set a budget for how much you could spend on a new house, but then you find something you love, something you can't stop thinking about, and even though it's $50,000 or $100,000 over your budget, you buy it anyway. And that would be like money spent that you know, it was a hidden cost, and the hidden cost was like your emotional attachment to the thing that you found.
I'm praying to God that my house that's on the market, somebody's heart tells them to spend an extra $50,000. Like that would, you know,
that would make everything all right.
That would make everything all right.
Well, I hope that happens for you, sir. Another thing that people don't always think about: property taxes. You might think I'm paying $1,200 in rent or the mortgage. For that, I could be paying a mortgage in my own place. Well, yes, but if you're only plugging in the principal and the interest rate into your mortgage calculator, you're missing out on a huge expense right out the gate. Property taxes are a big deal, Malcolm, and something that people don't always calculate when they're, calculating what it's going to cost to live in their new home. Home insurance is cheaper than what I thought initially it was, but it costs a lot more to insure a home than, say, a one-bedroom apartment. That is true.
It does, but it's also important to make sure that your coverages are substantial.
Absolutely.
So not necessarily just the cost to repair or replace the house if something were to happen to it, but like the coverages for if an accident happens in or away from your home.
Right.
So things like that are important to make sure that, you don't necessarily just set them at the minimum threshold, but you actually get everything covered.
It's important to go through each one of those options to hear each one and what you think, there might be a possibility of this, and if not, then you can, consciously decide not to go with it. Then here's another one that's interesting. Overspending on the down payment, potentially reaching into your retirement accounts or not accounting fully for seller credits or incentives that lower down payments. This is interesting because I have a friend who reached out to me, and they were like an old friend from high school, and they were like, hey, they had some, advice that they were looking for about money, but they shared the fact that they had done the very thing which this piece mentions, which is they reach into their retirement accounts, and she said it cost them $8,000 for whatever. For what I imagine it was like the fees and whatever it cost to pay back into the retirement account, but the amount that they spent.
Oh, the cost of borrowing from their retirement account was $8,000.
I don't know if it was the cost or that was the amount that they took out, or it was like maybe they took out $6,000 and had to pay back $8,000. I don't know what the details were, but the way she made it seem was like it was $8,000 they didn't have to fork over or get put back into the account or something, but it cost her $8,000, which is interesting. Also, another element, the furnace and air conditioning. That's a big one. I'm sure you've heard of air conditioning units going out.
I just replaced one.
Well, there you go.
I think like $3,900 or something.
Man.
to replace it. So yes, I have.
Wow. If you're not buying brand new, it's a higher risk of going bad at an unexpected and absolutely inconvenient time. Safety. From fixing the front porch to installing an alarm system, adding motion detector lights, or lighting a footpath, those extra safety features are going to cost you extra money. And then another one on the list was savings. Do you know how much money you can save by installing new windows, a programmable thermostat, energy-saving light bulbs? You can save a whole lot of money, Malcolm, but guess what? In order to save a lot, you got to spend a lot up front. So while you're focused on the savings, your money is slipping out the back door, and that's kind of the thought that if you spend money on trying to like upgrade stuff, you won't reap the benefits of those upgrades until much later. Obviously there's a upfront cost for getting like solar panels installed in your home,
Right.
and you probably won't reap those benefits for another like 15 to 20 years down the line. So Malcolm, real quick, what are some of the unexpected costs you recall when you bought your first home, which you're now getting ready for sale in North Carolina?
So a couple we touched on. One, a new HVAC system,
Okay.
which, I tried to patch it as long as I could. They put like Freon and coolant and stuff in it. Probably had duct tape hanging from every piece you could possibly put it on before I finally gave in. Also breaking the pipe, not knowing that you're supposed to turn your pipes off to weatherproof them and all that kind of stuff. And having to deal with my living room flooding. Also having to buy new appliances.
Okay.
So washer and dryer came with the house.
Right.
And they were in decent shape, I would say, at best.
Okay.
when I bought it. And the dryer burnt out, and so I decided to just go ahead and replace them both at the same time.
Right.
But that was another, $600 or so that wasn't accounted for.
Right.
Also, talking to a friend of mine who happens to be a realtor recently, right now we've talked about a lot the fact that home prices are extremely high for new home buyers.
Right.
So where you would normally be able to get into a starter home, you have a lot of competition from folks who are a little more established who are also buying that same house.
Right.
And so new home buyers are having to put up with a lot more raggedy conditions, for lack of a better term, less desirable
I think raggedy
moving
works.
conditions, where they're having to spend money to make renovations as soon as they move in.
Right.
Painting themselves, new carpet, that kind of stuff, where normally you wouldn't have to do that, or you would at least be buying at a lower price point.
Right.
Now they're buying at the very top end of their price point,
And still having to
overspending
do-
because their heart got into it,
Right.
and still having to spend money on renovations where
Right.
it used to be an either or.
Indeed.
So those are the kind of things that I would be, looking out for.
Right. There are some other front end costs that are more than just a simple mortgage lets on. Like places like Bankrate will let you calculate your mortgage, but that's not the full. There's also, like I said, home insurance, property taxes that vary by city.
Mm-hmm.
There's places here in the DC area where taxes vary wildly. Like DC's taxes are like very low, and then the surrounding counties it's a lot higher.
Yeah.
Depending upon where you are.
You can find that information on Redfin and Zillow and
It's
probably a bunch of other ones too.
It's available to us, but sometimes people put blinders on in terms of what they want to
you
look
better
at.
not.
Yeah, don't put blinders
For
on.
hundreds of thousands of dollars on the table, you better not.
Right. And then also, of course, as we mentioned, security systems. And this is my favorite, loan origination fees, which is just a fee that...
Sounds like a hoax.
It is a hoax. It sounds like fake news. Loan origination fees are essentially a fee that a mortgage or lender company will charge you to make the loan. It's it's a nominal fee in relative to the full amount that you're paying, but it's still something that makes it more expensive. Something if you're like in a community, which Malcolm, I think you are. In North Carolina,
and I'll be glad to ditch that HOA.
We have an HOA as well, which is a homeowners association fee. Then of course HOA entry fees, and as you've mentioned on the show before, hope to God you don't have a pool in your community.
Yes, because the HOA is just going to go up every single year, and there's nothing you can do about it.
So my thought is like if I get to be the president of the HOA fee, I could do everything cheaper.
Yes, but you'll also be the guy that people come toilet paper and egg your house.
Oh, okay.
And come yell stuff at you as you're walking outside to your car in the morning. And so, with great responsibility,
right.
With great power comes great responsibility, to
Indeed.
quote the granddad from Spider-Man. Or Uncle Ben, that's his name,
Right.
Uncle Ben.
What's interesting to me, when another thing that happened when we were walking through the house, the builder was explaining to me that we have to change the filters for the HVAC system in each room. And I was like, wait, what? Like, what? I have to do what? Every 3 months? Well, yeah, you can get the 2-month one or the 3-month one. And I thought when he first showed me the first one, I'm like, oh, that's the only one in the whole house. No, there's one on every single floor and in multiple places. I'm like, what is this? Like,
so prepare to spend multiple weekends at Home Depot figuring it all out, because you'll go buy a filter, find out it doesn't fit for all 6 of your different
they're all different
and all that kind of nonsense. And fortunately, there's a Home Depot in every corner almost at this point.
Right.
But just be ready to spend your weekends there. That's what it becomes.
Indeed. Some things to keep in mind when approaching your cost and when you're considering buying a home. One of the things we would suggest is just stay realistic on monthly cost. And you probably want to give yourself a cushion in terms of, you don't want to be at the top of your budget. Right? You should probably be just under what you think you can actually afford, because it's always going to be something that life throws at you.
That's so much easier said than done.
It is.
Like where we just talked about folks overreaching because their heart gets into it.
Indeed.
You literally now have stretched yourself so thin that, tomorrow after you move in the house, the next day you're like, what am I going to eat for lunch? Like it can get to that point where you just pull out every penny you have to throw at it. So
for sure. Also, what's really important, do an entire budget that includes everything with the mortgage and everything else to see if you can really afford it. So your existing expenses, your car, insurance, whatever else you're paying for, student loans, and factor it into that equation and make sure that you can actually afford it.
So you mean to tell me that just because I can get approved for it doesn't mean I can afford it?
That, unfortunately, is the truth.
Huh. Interesting.
I don't know why. I don't know why they don't tell you that kind of stuff like at banks and things.
You don't know why the bank doesn't tell you not to borrow more money?
I have no idea.
Oh, okay.
I have no idea.
Interesting. We'll have to look into that.
Indeed, we would. Another tip for you: always keep your options open. This was something that I learned through the process.
Okay.
And this is what I'm gonna ask our guest Adam Holmwood of Village Settlements Inc. a little bit later in the show after this next music break. One thing that I learned through the process is the one thing you have on your side, which people don't always know. You don't have a lot of leverage as a home buyer, right? You're asking a bank for a large sum of money to put down on an asset, which is the house.
Right.
The only thing you can do as leverage is to have options and to be able to say to X, service company that if I go with X, then I'm gonna check in with Y to see if they can give me a better rate. And every time that I use that as like a thing to leverage one against the other, somebody gave me something, and somebody gave me something. And so if I had not done that, we'd have been paying a whole lot more on the front end and probably on a month-to-month basis had we not gone through that process. And I did that for just about everything: insurance, title insurance. And they'll be like, and they'll act like they can't do anything. Right. Well, this is what it is, and this is what the rates are. I can't.
Is that how they sound?
That's exactly how they sound. I can't say the word, but it's
Is it collusion?
It's that. It's not collusion. It's something else.
Okay.
And it's on the floor after a horse walks by.
Got it.
So anyway, that's something that people really need to make sure that they do is have options.
That's a very good point.
To leverage them against one another, no matter what.
So don't just settle for the first quote somebody gives you, but actually see what everybody else is offering too.
Because the temptation is to continue to move forward just because you want to get it over with, and it's a lot of it's overwhelming. But you have to stop and engage the process a little bit. So make sure you do that, and that's just a little bit of words to the wise. I want to quickly remind you, you're listening and watching Manage Your Damn Money with Ben and Malcolm. On this episode, we're talking about the hidden cost and the unexpected cost of home ownership and owning a home. When we come back from this music break, we're going to invite Adam Holmwood of Esquire, he's a lawyer, of Village Settlements, Inc., onto the set to discuss the unknown and undiscussed often cost of buying a home. I want to remind you can always catch past episodes of the show on Apple Podcasts, SoundCloud, Stitcher, Google Play, and Spotify. Of course, please, 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 we beg of you, leave us a good review on any of those platforms. That helps us go up in the ratings. It helps more people find our show. And of course, you can send questions to info@manageyourdamnmoney.com. You could also catch us on social media. Malcolm, what's your handle?
At Malcolm on Money.
And of course, mine on Twitter and Instagram at MYDM1, and on Facebook, facebook.com/manageyourdamnmoney. This is MYDM with Ben and Malcolm. We will be right back.
Yeah, absolutely. I drove over here, followed my...
Welcome back to Manage Your Damn Money with Ben and Malcolm. We're talking on this show about the unfamiliar and unknown cost of buying a home. Me and Malcolm hit on a couple different topics of where you can spend unknown money on your purchase of a home or maintaining a home. And we are excited to invite and welcome to the show Mr. Adam M. Holmwood, Esquire. He's a lawyer of Village Settlements, Inc., a title insurance company here in the Maryland, D.C., DMV area. Adam, welcome to the show.
Thank you so much. It's great to be here.
Indeed. Now, I should give the background. Adam and I met like a couple weeks ago, I guess now, like literally, because my wife and I did our first time home buyers class, which a lot of people are, you have to do it as part of the loan terms of whatever your kind of loan you're getting. And you and some of the other speakers were like, we were prepared to be bored out of our minds. And you and a few others like really surprised us. And we like thoroughly actually enjoyed it and felt like we learned more about the process.
That's awesome.
So that's why we had you on the show. So why don't you just tell us a little bit about yourself, what you do, and like where you fit into the home buying process.
Yeah, I appreciate it. It's great to be here again. Thank you so much. So yeah, I expected to bore you to pieces too that day. So, I thought I should be handing out pillows and blankets for my presentation. So to hear some positive feedback, I really appreciated that. And I was glad that I could share some valuable information. So I've been doing this as a settlement attorney for about 10, 11 years at this point. And I have a passion for this business and, assisting buyers and sellers with one of the most important transactions of their lifetime. And, really what we do is look out for our clients to make sure it's a safe transaction, their property rights are being protected, and really distilling all this stuff. You guys have touched on a lot of the, the minutia of buying or selling a home. And, we sweat the small stuff so that you guys can focus on, getting your financing together, focusing on the moving and the transition and all that good stuff, and just enjoying your home. So
for sure.
Yep.
Now I have to ask a very basic question, and you explained it excellently during the session. What the heck is title insurance?
Title insurance. That's a great question. A lot of people have no idea what it is. Why do I need it?
Right.
So title insurance is what protects clear title to a property. Now, the homes that you guys own, you want to make sure that you're the guaranteed property owner of that home. No one else can come back and claim that they have an interest in your home, or that there's a lien or a judgment or an unpaid debt from either current or previous owner that's attached to the property. So title insurance, there's two types of title insurance. The owner's policy that we buy as homeowners is what protects our investment and makes sure that we are the guaranteed protected owner of that property for the lifetime of our ownership. The lender, most of us are in a position of having to finance a purchase. We're getting a mortgage loan. The lender is going to require, as a condition of the financing, that we purchase a loan policy, a lender's title insurance policy, to protect the lender's investment.
Right.
So on almost every transaction, residential transactions, at least here in Maryland, there's two types of policies being issued. One that protects us as the homeowner, and then one that we buy on behalf of our mortgage company to protect their investment, because they're making a significant investment in our home as well.
Right.
They want to be protected to make sure that the property, which is the collateral for the loan, is guaranteed as an asset to be titled by the correct, by us as the homeowners.
So that insurance policy from the lender's side, does that stay in effect the entire time I own the house, or is that just
the lifetime of the loan?
Okay.
So it's a one-time, title insurance are always one-time premiums. Every other type of insurance out there, we make ongoing premiums, right? So with title insurance, it's a one-time premium. That loan policy covers the life of the loan, whether it's a 15 or a 30-year loan, and that owner's policy covers the lifetime of the ownership. So whether you own the house for 5 years, or maybe it's in your family for 60 or 100 years, that one policy is in place to protect the ownership.
Right. And just if it's not clear, title insurance, it's really to make sure, and correct me if I'm wrong, it's really to make sure that like the land and the place that you are owning is really yours as like the deeds of the, I don't know what the legal terminology would be, but as things pass from one party to the next over the years, making sure that happened in the proper way and that there aren't any issues in it.
Exactly.
So that is correct.
That's exactly right. So the property that you bought, if we went back and we examined 100 years worth of the land records, it went from A to B, and then B sold to C, and it was a clean transition. So, the county here in Montgomery County, the circuit court maintains all those land records. So when we handle a transaction, we search and examine 60 or 100, sometimes over 100 years worth of land records to make sure that it's a clean chain of title.
Wow.
And we're relying on the county to maintain all those accurate records. So, there's a lot that goes into it. But again, that's why we look out for you. You don't have to worry about the details there, other than knowing that you're protected and that you have clear title.
Would you say somebody has successfully brought a claim against a property after somebody has bought it, like that the court sided with them in that process?
Well, I mean, there's a whole variety of analysis there, but it just depends on the circumstance. I'd say let me give you an example. Some of the most common scenarios that we deal with title insurance is not. I mean, when you think of a massive claim, it would be, okay, all the land that this subdivision is built on, where there's maybe 100 homes, that was farmland 80 years ago or 60 years ago. And the biggest fear there would be that someone comes back and says, hey, I can prove my grandfather did not sign this deed. This was a forged deed, and now we have a defect or a cloud that affects a massive area of land. Okay. That's a big reason why you would want title insurance.
And what happens in that scenario? Like, as a homeowner on that farm, so to speak, or that used to be farm, what then happens?
So if a court sided, Malcolm, with a claimant, maybe a grandson who said my granddaddy didn't sign that deed, it was forged, then the court could award title to that family. Okay. And then all those homeowners who are affected by that would be in a position of having to file a claim on their title policy. Oh, wow. That's not going to come up very often. Right. I'll give you an example of stuff that comes up much more frequently. When you bought your house, you had a home inspection done, you probably had some negotiated repairs that the seller was going to make before the settlement. And let's say that as one of the requirements that the seller was going to pay a contractor $5,000 a day or two before closing for XYZ repairs. Right. What we do see happen from time to time is that payment bounces.
Or doesn't make it.
Wow. Or even the seller's taking their proceeds and they're off in California, they're never going to come back to Maryland, and they put a stop payment on that check. Right. Ooh, wow. Thinking that, hey, what's the worst that can happen? Right. The contractor's probably going to pursue a remedy against the home and is not going to want to chase me to California. And now it's your problem, Ben. So now as the homeowner, you just had a contractor slap a mechanic's lien on the home saying, hey, I did $5,000 worth of work on this property, and I still haven't been paid. Right. Wow. And under state law, I'm entitled to actually attach my remedy is attaching a lien to the property as opposed to going after the previous homeowner who was supposed to pay me. Right. So that's the more along the lines of common scenarios that we see why it's important to have that owner's title insurance policy.
So another case you made me think about with grandson fighting for granddad's farm scenario would be in cases of eminent domain. And it's my understanding that you almost never win eminent domain cases. And to make sure to put that in context, that's essentially when the city or the municipal government comes along and tells you that they are taking your property basically for improvements to the area. So in cases like that, it seems like title insurance doesn't actually do you any good. Is there a caveat in there somewhere that maybe would help me out?
So this is directly from the U.S. Constitution, and it's called the Takings Clause. And it says that the federal government can take your property in exchange for just compensation. Now, just is not defined. That's going to be a very abstract,
sounds like a monument or something.
But the point is that you would have, if the government came to you and they said that they were offering you just compensation for your property under eminent domain and the Takings Clause, you would be in a position of having to secure representation to negotiate with the federal government and determine what is just cause, what is just compensation. Right. what's the fair market value, the fair value to be compensated there. Yeah.
Okay. So real quick, title insurance happens at the end of the home buying process. Is that
So it
correct?
happens it's a expense at the closing.
Okay.
Yeah.
Very good. And I know you specialize in Maryland. You talk about Maryland and maybe what you understand about broad tenets that could be applied to people who don't live in Maryland. Do title insurances vary from company to company, or like what's the situation with that?
So here, I'll definitely speak to Maryland specifically, where Maryland is what's called a rate filed state. All that really means is that the Maryland Insurance Administration regulates title insurance.
Okay.
They regulate what title underwriters can charge. So if you're a title underwriter, you have to actually file your rates with the state of Maryland, and they're going to approve it.
Oh, wow.
And because we're in a rate filed state, A title insurer, B, C, they're all issuing this substantially the same product for substantially the same cost.
Okay.
Yeah.
Okay.
So as a home buyer, when you're shopping around title companies, let's say,
Right.
you're not really shopping what underwriter. It doesn't really matter to a home buyer what underwriter does this title company use.
Right.
The rates are regulated by the state. Really, what you're shopping is their specific fees, title and settlement fees. What do they intend to charge you for their title and escrow services? And those can vary substantially.
Would my suggestion that I made earlier in the show in terms of shopping around the service, would that be of help in title insurance and the entire home buying process, across the whole thing?
Absolutely, absolutely. Title insurance, the title provider, I should say, is definitely worth shopping around, because what usually ends up happening is I'm a buyer, I don't know anything about financing, I don't know anything about title. I'm hiring a realtor I trust, and I'm going to go with their recommendation. If they tell me they have a good relationship with this mortgage company or this title company, those are probably going to become my starting points that I'm going to at least reach out and inquire about their services. What do they intend on charging? A lot of homeowners, that may be as far as they go. And I definitely appreciate when buyers shop me as a title company, because I think my fees are competitive compared to what other companies charge, but also it gives me an opportunity to be interviewed by a client and talk about what I'm going to do and what I'm all about, and just being hands-on as an attorney point of contact for one of the most important transactions of their life. So I tend to think if more buyers shopped, I'd get more business because I'd have at least a fair opportunity to win over their business. But again, that I do think it's just as, if not more, critical when you talk about financing.
Okay.
So you mentioned that there's quite a few things that show up at the end of the process around the time you would need to rope in title insurance. Can you kind of educate us a little bit on what some of those other things are, in addition to the title insurance that goes into
Like
the
other
closing?
related closing costs that a homeowner might not be aware of.
Processes, service providers that show up as part of the closing.
Yep, definitely. So, for folks who've done this before, it's not going to really come as a surprise. But a first-time home buyer, they don't realize that, hey, I've been meticulously saving my down payment, and that 20% or that 3.5% or 5% or 10%, whatever I'm putting down on the mortgage, that's not really the end of the story, right? So you're going to have some non-refundable costs. If I want to buy a property over here, we might find out 2-3 weeks into the transaction that whether the property condition is just a disaster and I don't want to proceed, or there's title problems that it's not worth pursuing that property. Whatever the case may be, you're going to probably order an appraisal and a home inspection. These are non-refundable costs that you're fronting before you actually get to a successful settlement. And for some homeowners, it may just be bad luck if you've had 4 or 5 contracts fall through and you've spent all that money on 4 or 5 appraisals and 4 or 5 home inspections, and it adds up, and it's out-of-pocket money that, again, you're not getting back. But again, Malcolm, as far as shifting towards the actual settlement, absolutely. I mean, the closing costs can be pretty extensive as far as setting up an escrow account. Most mortgage companies are going to require that your property taxes and your homeowner's insurance are actually built into your monthly mortgage, and they want you to set up an escrow cushion at the time of your closing. You guys touched on lender fees, origination costs. I'm issuing a loan, but I'm actually, in addition to the principal and interest that you're repaying, I'm going to charge you for issuing the loan.
Which is hilarious, by the way. But yes.
So I mean, I would say 99% of mortgage lenders out there are going to have some type of origination or processing or underwriting fees that they charge, and then you talked about homeowners associations.
Mm-hmm.
And homeowners associations, especially in suburban areas like this, are going to affect many communities.
Right.
There's going to be some upfront transfer and setup fees,
Right.
stuff like that. And then, any kind of utilities that, maybe the water's built into your condo payment or something like that.
I found out there's a $25 setup fee for like my electricity, I think.
Just to set up your BGE account.
To essentially type your name
Yes.
into a field
Right.
and
Yes.
set up your account.
She was like,
I've
yes,
charged
it'll be
you.
$25. I was like, really? Okay, thank you.
So
Right.
I think right here in the show, though, it's important to throw in again one of my favorite phrases, which is that everything is negotiable.
Right.
So as you're hearing these different fees being thrown at you, and we're talking about them and kind of, old men shaking our fists to get off my lawn, keep in mind these things are negotiable.
Yeah.
It is definitely possible to just simply ask.
Yeah.
Can you reduce that fee or can you eliminate that fee while they're listing them out to you on the phone?
Right.
Yeah.
To Ben's earlier point, sometimes they may even stand firm and tell you, no, we won't remove them.
Right.
And then it's important to compare that new bill of sale to the other lender that maybe the interest rate was fractionally higher, but they didn't have all those fees built in.
Right.
So then you get a chance to compare apples to apples and
Right.
see which one actually comes out a little cheaper. So
And to Malcolm's point, how do people know, or how can people be confident, what would you suggest, that they're getting a full 10,000-foot view of their entire scenario? Like, and especially for people who this is their first go-round, how can people be confident that, like, they're doing all the things they're supposed to do, even if they're working with limited understanding of how the whole process works?
Well, it's a great question. I mean, the most important way I can answer it is that you have a trusted team of professionals.
Okay.
I've never done this before. I'm going to rely on my realtor. However I found my realtor, maybe it was a referral from my mom or my neighbor or somebody who's worked with them before. I have a great relationship and rapport with my realtor because that is my first and best advocate in the transaction, who I'm relying on to put me in touch with some title companies I can shop around, some mortgage companies I can shop around, folks that they've worked with, who they have good experiences with. And hopefully that, at least from a starting point, gives me quality, individuals and quality companies that I'm dealing with. I can't overemphasize the shopping of the mortgage is probably the biggest thing.
Yeah.
Some people might be enticed by the lowest interest rate
Right.
or the lowest fees. I really, I think that shopping a mortgage company really comes down to three things. It's the interest rate, it's the fees, but it's also the rapport and feeling comfortable of who the people are that you're dealing with.
Right.
Because I can have the lowest rate and the lowest fees, and then if we have settlement scheduled for Friday at 4 o'clock and I've got the moving vans all lined up and
Right.
everything has been planned very carefully, and now the lender's not ready,
Right.
and now I need to negotiate a contract extension with the seller, that's going to cost me money. I have to reschedule the moving people. That's not going to be cheap. So the point is that you want to know that you're working with a company that's going to get the job done, and they're going to be there when they need you, and they're going to be responsive and accessible.
So another piece to add to that, questions to ask your lender, your potential lender, is whether or not they're going to be selling that mortgage. And a lot of times people will say, well, I don't really care as long as they give me the loan and get me in the house, then, what do I care? But it does affect your experience as the owner of the home if the company who your mortgage is now sold to completely services you differently from the
Right.
people you had before.
Definitely.
Where maybe you missed a payment because you thought you had it set up online to auto draft and you
Right.
didn't,
Right.
or you changed your account numbers and so it didn't auto draft out of the right account or whatever, and you call them and you say, hey, look, I made an honest mistake, can you guys waive the fee? The lender you're working with is in the habit of saying, sure, yeah, no problem, whatever. The new company says, no way, you owe us a $500 late fee. Well, now you've had a bad experience and it cost you more money than it should have because mortgage company A sold your mortgage off to mortgage company B, who in turn sold it to C and D, and so on and so on. So simple things like that are also good questions to make sure that you ask, because the lender you sign up with, you want to make sure is the lender you end up staying with.
I don't disagree with you, Malcolm, but at the same time, I don't necessarily want to tell folks to go out and find a mortgage company that's going to guarantee they're going to keep their loan. And the reason is because probably at this point, I would say like 90%, 95%, maybe even higher are going to transfer or sell the loan. And ultimately, that promissory note that you sign at closing, which obligates you to repay the debt, that's a binding contract between you and the bank, and those terms aren't going to change.
Right.
Those are fixed terms that no matter who's servicing and collecting the payments, they're not going to change. But I don't disagree. The school of thought there is that everything you refer to, the convenience and the rapport and the trust of dealing with one company.
Right.
And there are companies out there, whether it's credit unions or smaller local companies, that will tell you they're going to keep and service the loan themselves. And that could definitely be attractive to a lot of people out there.
For sure, for sure. Last question before we wrap this show for you, Adam. What's your biggest piece of advice for millennials who are on the road to, considering buying a home or they're getting prepped? Like, what would you tell them, like you told us in that class?
Yeah, I think the biggest piece of advice I would give folks out there is utilize the resources that are out there. What you guys are doing is a fantastic resource. Think about 20 years ago, 10 years ago, the amount of information that was accessible to homeowners was nothing compared to what it is now.
Right.
So utilize those resources. Utilize the information that's out there, whether it's some reputable financial companies like Bankrate, or shopping around mortgage companies and title companies. There's three. Before I forget, I want to give 3 money saving tips. One of them is we've been talking about shopping around the mortgage company. Second one is shopping around the homeowner's insurance. People don't realize that, okay, just because I have my car insurance with this company, I'm going to give them a shot. I'm assuming they're going to give me a good premium. I see you would not believe the wild fluctuations I see in homeowners insurance premiums, and I cannot for the life of me explain why this property at the same price point was twice as much as that property at the same price point. Right. And then the third thing that is specific to what I do on the title insurance side is that as a buyer, you can ask the seller to provide a copy of their existing title insurance. And then what that's going to allow the title company to do is issue what's called a reissue rate on the title insurance. That reissue rate can save a significant amount of money. Generally, it's about 30% that the buyer's going to save on that. All these things add up.
Yes, indeed.
I'm going to move in knowing that the washing machine's going to fail right away, or that I'm going to have a flood. I'm going to be filing a claim on the insurance. So the point is that these are hitting. We're exposing them, right? They're not hidden anymore, because we're going to bring them to the light and make sure that that homeowners are educated and go in with with the knowledge and the tools.
Indeed.
To make a great investment.
Indeed, indeed. Well, Adam, thank you for coming on the show.
Of course.
If people want to get in contact with you, what's some information?
Absolutely. So the best way to get in contact with me, my company is Village Settlements. We're a local firm. We've been here in Montgomery County for over 15 years. We're attorney owned and operated. We only have attorneys do the most critical aspects of the client's transaction, the title work, the settlement, and they can get in touch with us through the website. I don't know if there's any contact information we want to post anywhere in connection with the blog.
They can Google it.
They can Google it. That's the best way. Yeah, I would say we're very easy to find on Google. Absolutely.
Indeed, indeed. Well, Adam Holmwood, thank you so much for coming on the show.
Yeah,
excellent information, and I think this proves why I had you on the show, sir. So thank you so much.
You're a smart man, Ben.
Indeed, indeed. Well, we want to remind people that you can catch past episodes of Manage Your Damn Money on Apple Podcast, SoundCloud, Stitcher, Google Play, and Spotify. Simply search Manage Your Damn Money in the search function of those apps. And of course, please leave us a review on this show and tell us how good of a job Adam did. And of course, you can send questions to us if you want us to cover a particular topic, or if you want us to do a Malcolm's Money Minute. Send your question to info@manageyourdamnmoney.com. You can also catch us on social media. Malcolm, what's your handle?
At Malcolm on Money.
And of course, mine is at MYDM1, and those are both on Instagram and Twitter. And of course, facebook.com/manageyourdamnmoney. Thanks to our partners here at Montgomery Community Media for another great show. Until next time, be good with your money.
Peace.
Peace.